Do I necessarily need to learn all of these things, watch all of these videos and all that? But one good thing about trading is it is not too much of strategy that makes you profitable. There are other things that are very much essential. Yes, strategy is there. You will learn how to trade. We'll teach you how to analyze charts. We'll teach you how to use fundamentals, that's news events, to analyze chart as well. But more than that, you are going to know the essentials for success in Forex. All right, so briefly we'll get into it. Okay, so before I continue, do we know what Forex is? Because sometimes it's strange. Some persons might not even know what Forex is and they want to get into trading. So, Mr. Taiwo, do you know what Forex is?
Yes, well, yes, sir.
Okay, so in your own words, so can you just explain to us?
To my best of knowledge, I believe knowledge is the exchanging rates. Forex trading is online program that is existing that you can exchange through your what's it called? In exchange rates through naira to dollars. It's online trade that you can do through naira to dollar.
Okay, okay, okay. Uh, yes, you are correct. So basically, Forex is foreign exchange. Forex is foreign exchange. So, but when you pay it with trading, it becomes when you try to make profits, or when you are making profits, or when you attempt to make profits off the fluctuation in the exchange rates of foreign currencies. Your foreign currencies like dollar, like GBP, Great Britain pounds, like euro, like Canadian dollar, like Japanese yen, like New Zealand dollar, and the likes. So when you are trying to make money off the fluctuations, now as you know, the market value of this currency doesn't stay the same. It fluctuates every now and then. But what we are trying to do, or what we do as traders, is to analyze the extent of the fluctuation that we want to take advantage of. So I don't know if you understand what I'm trying to say. Are you getting me, please?
Yes, yes, we are following.
Okay, good. So that is what we are trying to do. We are trying to analyze, are we to buy or sell? So basically, it is the buying and selling of foreign currencies. But we do it digitally. Gone are the days when you need to do Forex and you need to go to Forex trading, rather, you need to go to banks to place your order. But now you can do it from the comfort of your home. You can get to trade anywhere you are in the world without having to step out of your home. So that is the freedom Forex brings to you. Forex is one of the business you can do basically from anywhere in the world, anywhere. It's a form of working without borders. Like anywhere you travel to, you can get to do it. So basically that is Forex. But I'm defining Forex because that is what people are used to here. But when it comes to trading, actually what we trade is much more than Forex. Forex is just an aspect of trading. Do you get? I'm very sure some of us are conversant with crypto, stocks, and the likes. Some of us are familiar with it. So we have Forex, we have crypto, we have stocks, we have shares, we have derivatives, we have commodities. But what covers them, what serves as the umbrella for all of them is what we call financial markets. Now, financial markets refers to any marketplace where trading of financial instruments or trading of asset class. Now, the asset classes could be Forex, could be crypto, could be stocks, could be shares, could be bonds, could be equities, could be currencies, could be anything. So that is where the trading occurs. We call it financial markets. So Forex is just an aspect of the financial market. And the good news is, if you are learning how to trade Forex, we don't just teach how to trade Forex alone. We teach you how to trade everything. The chart language is the same everywhere. If you know how to analyze your chart in Forex, you can apply it to crypto, you can apply it to commodities, you can apply it to anything. So I will be sharing my screen now so that we can get to see what I'm talking about. Please, once you're able to see my screen, you can let me know. Please, can you see my screen? Hello, can anyone see my screen? Please, if you can see my screen, you can put it
Yes.
on the, okay, good.
It's now seen.
Oh,
Okay, it's okay now.
Yes.
Okay, basic, okay, yeah, thank you. All right, so I mentioned that financial market trading is much more than trading Forex, but what we are used to in this side of the world, or this part of the world, is Forex and maybe crypto. So we have one way that gives you access to trade anything tradable, as long as it has a digital representation of price and there's a chart to it, so you can always analyze them, trade them. So this is a platform called TradingView. TradingView is where most traders like to analyze their maybe Forex, crypto, or any other asset class. So this is where they come to analyze it. So I'm just on this platform to show us that there are a lot of stuff that we can trade. Trading is not just limited to Forex and crypto, as most persons will know it. So if you look at the left-hand side, you can see where my cursor is pointing to. This is, we can see something that looks like GBP USD. Can we see this?
Yes.
Okay, GBP USD. And if you see GBP USD means Great Britain pound, then US dollar. This is Great Britain pounds, US dollar. So this is the pair that is currently on the screen. So this is the currency pair that we have. So this is the price movement of how GBP versus USD has been moving. All right, so, but just for us to know that it is not just related to that alone. So this is what the financial market has to offer. We can see that we have stocks here. Okay, so this is stocks. We have a lot of stocks. We can get into financial market trading by trading stocks. You can trade funds, you can trade futures, you can trade Forex, you can trade crypto. You can trade crypto, you can trade indices, you can trade bonds. In fact, you can trade a country's economy. Yes, it is very possible. You can trade a company's economy, then you can trade options as well. So if we go here, okay, let's just try to search for so let me search for Apple. Okay, so this is Apple stocks. So you can also trade stocks, like I said, Apple is Apple AAPL is Apple stocks. So if you want to own a part of the company, so you can own a part of the company and have access to like you can hold a part of the company, so that when the company makes money, that part which you are holding, you will be given a certain reward according to your holding as well. So many people have bought Apple, many people have bought Elon Musk stocks, many people have bought Tesla, many people have bought a lot. So you can always buy stocks, and it is not just limited to Apple. Just think of any Fortune 500 companies out there. that has a global influence, you can easily, this is Microsoft. Okay, so this is MSFT, this is Microsoft stocks. So you can easily click on it, analyze it, then buy it. So aside from stocks, we have Forex. I've mentioned Forex, we have crypto. We have indices, we have bonds, we have economics, we have options. And we have, okay, let me show us this. We have what is called commodities. Commodities are your products or byproducts that you see from day to day. Your consumables, we have it as well for trading in the Forex market or in the financial markets world. So for example, let's search for cocoa. So it is possible for you to trade cocoa. So this is cocoa versus US dollar. Yes, some people don't do agric, but they are trading cocoa. Some people are not into agriculture, but I mean, they're trading cocoa. So you can trade cocoa, you can trade sugar, you can trade oil, crude oil, you can always trade it as long as there's a chart representation of it. So you can trade basically anything. So as you are taking your chocolate, you can also learn how to trade, and you'll be able to trade the stock as well. So also, aside from that, you can trade MTN, your Airtel stocks, you can trade MTN, you can trade anything, like I said. So this gives us a limitless opportunity to have access to any market as long as there's a digital representation of it. So we can always trade it. So I hope we understand that.
Yeah.
So please, before I continue, if you have any question, you can let me know before we move on. Okay, who has a question? Okay, so in the absence of none, we would move on. Okay, so what do we do in the financial markets? What do we do in the financial market? Just like any other market, what we do in the financial markets is we buy and sell. Two things, two major activities are always constant in any marketplace, buying and selling. Although some other things happen in the market, but it is not part of the market design for it to happen. You know, buying and selling takes place. Why some people can just go to market to go and for sightseeing, just to see how the place is and all that, just to feed their eyes. Why some people go, you know, we have different people with different intentions. So some people go to steal in the market. So we have so many things that people do in the market, but basically, as per design, market is strictly for buying and selling. Now,
Exactly.
so the same for financial markets, but what makes this one different is when we say financial markets, okay, let's say you are going to Abattoir now. You know what you are going there to do. The Abattoir market is basically you are going to buy meat. So if you are going to clothes market, you are going to buy clothes. So when we say financial market, so it is the buying and selling of financial instruments, different asset class. And we have mentioned the types of asset class we have. We have equities, we have bond, we have currencies, we have derivatives, we have commodities, we have stocks, we have shares, and the likes. So yeah, so the financial markets rely heavily on a system that is transparent to ensure that the markets that are set or the market value can be seen by everyone at any time. So that is the nature of the financial market. So like I've mentioned, we have two major activities, buying and selling. So that gives us the idea that we have two major participants in the market, buyers and sellers. It's as simple as that, buyers and sellers. All right, do we get that before we move on?
It's understood.
Okay, so let's narrow it down to Forex. I've explained Forex before many of us were able to get access to the meeting, but let me just cover that again. So basically, Forex is the largest financial market in the world. Forex is the largest financial market in the world, and it means foreign exchange. Just to put it simple, it is called foreign exchange. So then Forex trading is buying and selling of currencies, foreign currencies, when you buy or sell currencies. Now, the buying and selling, what you are hoping to gain from the buying and selling is to make money off the fluctuation. What we are doing in Forex trading is what I call speculatory trading, whereby you make speculations or predictions that price is either going to fall or price is either going to rise. So if it rises, if you are predicting or you are going for a buy and you are saying price will rise, and it aligns, and the reality of what you are seeing right in front of your charts aligns with your prediction, and you have executed the trade, and you are buying at the same time as price is going up, so you make money. So what we are doing is speculatory trading, although there are some other ways that you can make money in the financial markets, or let me say Forex. So you can make money aside from speculatory trading, you can make money by investing. That is when some people buy a particular asset class or financial instrument and they hold for a long time. Now there's this concept, I don't know if how familiar we are when it comes to some business slogans. So they will say, buy at discount, sell at premium. This does not just apply to trading alone. For a very good businessman, you need to understand that you are buying at discounts and you are selling at premium. Discount means cheap prices. So let's relate it to our day-to-day activities. If you want to buy, obviously you look for a very good price to buy, something cheap. You can even go as far as living where you are and go to a place that, I mean, they sell at a cheaper price. Then when you want to sell, you sell at premium. Premium means a price that is expensive. So that is the basic logic for looking for buys or sell in the market. We look to buy when the price is low and we look to sell when the price is high. Basically, emphasis mostly on basically. Yes, because there are some other things that need to align before we can say, oh, this is going to be a buy or a sell. All right, so for Forex, that is how it works. We buy and sell. So we have speculatory trading, we have investments, whereby you buy at a particular price, you hold, but in investments, what you make money off is you are buying at a low price and you allow it to mature over time, then you sell it, just like the same way we do in real estate. So then the last one is arbitrage. Because most people are used to arbitrage. I think Nigerian youths, well, yes. So arbitrage is when you buy on a platform that has low rates and you sell on a platform that has higher rates. So you are making money off the difference in rates from the platform that you are buying and the one that you are selling. So I hope we get that.
Yes, sir.
All right, so the Forex market opens 24 hours a day, but 5 days a week. The Forex market opens 24 hours a day, but 5 days a week. So it closes at weekend, but it opens at the normal day. I mean, your Mondays to Friday working days. And this is because what moves the market majorly is volume. What moves the market is volume. Volumes and fundamentals. Yes, when we get to fundamentals, I'll be explaining more. But what moves the market majorly is what we call volume. And I'll explain what volume is. So volume means those that are holding the majority of the positions, or those that are holding the bulk of the positions. Now, let's say we are buying something now. I mean, let's say we are like 10 in this group. We are buying something and there's someone that is holding 80% of what we are about to buy, or that is buying 80%, while the others are struggling to buy the 20%. So the person with the highest volume, we can say, is the one that buys or that bought the 80%. So in the Forex market, those that have the highest volume are basically banks and other financial institutions like hedge funds, central banks of nations and all that. So they're the ones holding most of the volume. The National Reserve for countries around the world. So they're the ones holding the volume. So it will make sense that, I mean, when they are off the market, markets would most likely close. So that's number one. And number two, because it has to do with money and the most of the transaction would have to be done. I mean, when it comes to foreign exchange, most of the transaction would have to be done with bank in view. The bank will be in the picture as well. So, and we all know that the banking world operates with the 40 hours a week, that's 9 to 5. So 8 hours a day, then in 5 places, that's 5 days. So that equates 40 hours a week. So they work with that within that time frame for every week. So that is why we have Forex closing down during weekends. But it is only Forex that closes at weekend. For stocks, they do not close. The bond do not close. Crypto do not close. Crypto is 24/7. So this gives us the opportunity to always trade other asset class when the Forex market has closed. So it gives us the opportunity. So when you call yourself a trader, there's no okay, I can't trade because the market has closed. As long as you know how to analyze the charts, you can always move to some other asset class, analyze it, place your trades, and watch it play out. Although for your sanity's sake and for you to have a balanced psychology in trading, it is not advisable to be trading every now and then. Depending on the kind of trader you are, there are some trading activities or there's some type of trading that could drain you emotionally and that could impact your psychology. So you would need to take a break. So we have different kind of trading. Yes. Number one is we have what we call scalping. Scalping is SCALPING, scalping. So scalping means when you are not looking to take advantage of the long-term trend or the long-term movement of price, you are just looking to get in and get out like almost immediately. So what you are trying to do is you are trying to capitalize on the short-term fluctuations in the marketplace. And after that is done, then you close your position. So most scalping lasts maybe just few minutes. It doesn't last up to an hour, just few minutes. That's why it is called scalping. You go in, go out. You are not wasting time. So scalpers capitalize on the major market movements. They look into their calendar and see when volatility is going to be injected into the market. Now, most of the things that we'll be learning is when to know when to expect volatility in the market. Volatility means the major market movement, what moves markets. So we are going to be learning how to anticipate that and how to strategically position ourselves for trading it as well. So we have scalpers. Then the second set of traders that we have is we have those we call intraday traders. Intraday traders or day traders. So intraday traders are those that what they are trying to do is they look at the trend for the day. Is it going to be a buy day for this particular asset class, or is it going to be a sell day? So if it's going to be a buy day, so they look for entries to buy and they make the whole buy trend for the day. So they close out in the evening, or they close their positions in the evening or after the trading session. So that is what they do, basically. So we have intraday, we have scalpers, and also we have swing traders. Swing traders are those that look at the weekly trend. is this week going to be a sell week or is this week going to be a buy week? So once they know that, oh, this week is going to be a sell week on this particular currency pairs or asset class, so they will look for a day to sell. So they look for a day to sell and they hold till the end of the week. So that is swing. So although we have some other kind of traders that are called positional traders. Positional traders are those that hold their positions long time, monthly, quarterly, yearly, and the likes. So those ones, they go beyond the charts. They take advantage of the interest rates. They don't really look into the short-term fluctuations. They can take advantage of the interest rates. They take advantage of a coin cycle or the cycle of the asset class. Okay, just like, let me give an example, just like BTC, we have some people trade the BTC day to day, that is Bitcoin. Yes, some people look to, we have spot trading and futures. So some people attempt to trade the BTC on a daily basis, while some people tend to just look for a very good entry point to buy, then they hold long term. So holding long term is positional trading. Some hold a year, 2 years. Well, it depends. Okay, so we have scalping, we have intraday, we have swing trader, and we have positional trader. Now, all these, the kind of trader you're going to be, it depends on, number one, what you need to consider at first is your Yes, if your personality does not align with the kind of trader you want to be, it might still not work. You might want to be doing scalping. You might want to just be scalping, going in and out, but you are someone that's your personality or maybe your mind cannot really cope with short-term fluctuations. Maybe you are someone that is very reserved, very patient and all that. So scalping might not really work for you. And also, number one, you need to consider your personality and also your schedule. If you have a 9-to-5 job and you want to scalp, yes, it might be possible, but your best trading style should be more of intraday. Intraday is just when you will look for, okay, is it going to be a buy day or a sell day? Then you buy or you sell and you hold till the end of the trading day. Then you close your positions or you set your take profits. Take profit levels are levels where you want, when price gets there, you want your positions to be closed at profits. So it is more or less like your profit target or your target objective. So yes, so you need to study yourself, know the kind of person you are. For some persons that are extremely patient and they focus on long term, yes, it also depends on your objective. And they don't really have the time to trade. Some might go for swing trading or positional trading. So we have different, so there's no excuse for you to say, oh, I don't really have the time. How about swing? How about positional trading? Then if you know that you have the time, maybe you are on break, you are on vacation, and you can just trade for 2 days back to back. Yes, you can engage in scalping as well. Okay, so we have that. Do we have any questions to ask before we move on?
Your teachers are clear. Very, very clear.
Hello, can you hear me?
Yes, you're hearing.
Okay, please, if you have questions, you can just use the hand raising icon, or you can just type so that I would get your question and attend to it. Okay, so I think we can move on.
Yes, sir.
Okay. I'm trying to share my screen. Yes, can we see
Yes,
the screen?
currency pairs.
Okay, good. Okay, so you might be asked, what do we trade in Forex? What do we trade in Forex? The answer is simple. We trade money. We trade money in Forex because what we are exchanging is we are exchanging money from one money to another money. Now, this is the only market where we are using money to buy money. In every other market, you're either using money to pay for a product or a service. So, but in this market, you're using money to still buy money. Or yes. So, or you are using money to buy what you can easily convert into money that is liquid, that you can convert into money anytime. So that is what it means. So it's like when you say you want to buy your US dollar. So it's like you're saying that, oh, you are buying a share in US dollar. So when
Please,
it
sir, I
appreciates,
hardly hear what you are saying, sir. Please let me increase the volume small, sir.
okay, can you hear me now? How about now?
I'm hearing you.
Okay.
Okay,
Thank you.
okay.
Okay.
A bit of, sir. Thank you.
All right, you're welcome. Okay, so in Forex trading, when you are buying a currency, it's like you are saying you are buying a share in that currency, or you are trying to buy into the currency or into the country's economy. So if it appreciates in value, you make money. And the same goes for when you are selling as well. You know, I told us that what we are doing basically is speculatory trading, where we make predictions that if we are making prediction that this particular currency is going to buy and it ends up buying, we make money. If you are making predictions that this is going to sell and it ends up selling, we make money as well.
Okay.
Okay, so for currencies, like I said, what we trade is currency. So we have different types of currency, but basically we are going to be categorizing them into two. We have what we call major currencies and minor currencies. Major currencies and minor currencies. So if you are just starting out in Forex, what we recommend for you, or what we advise for you, is to start with major currencies. Now, major currencies are currencies that they are the most used in the world for transaction. They are widely used. They have gained recognition over the years, and they are the ones that are most significant in international trade and the foreign exchange markets. So currencies like your Canadian dollar, your Great Britain pound, your European euro, your Japanese yen, your Australian dollar, your Switzerland franc, your USD, that's your United States dollar, then your New Zealand dollar. So they are now, we call them major currencies because they are most heavily traded and they represent the world's largest economy. So that's why we call them major currency. Now, let's not forget that when it comes to trading, you are using money to trade for another kind of money as well. So what you are buying with money is still money. I hope you get that.
Yes, sir.
Okay, so just like I know we are familiar with the physical foreign exchange, where we see Aboki or these BDC, Bureau de Change guys, who stay at one side of the world. They will be calling you that they exchange dollar. They will be asking you that if you have dollar to sell or dollar to buy. So imagine, even if you are buying something, they will give you a currency, and you are using another currency to buy it. So basically, you are using money to buy money, and when you are selling your money, you are collecting money in return. So that is basically foreign exchange. Okay, so because you are using money to buy money, so that means Forex is being traded in pairs. So that means we are pairing two currencies together to trade it. So that is the implication. So we have major currencies, then we have what we call minor currencies as well. So we have major currencies, we have minor currencies. So the minor currencies are currencies that they are not part of the any other currency outside the major currency. They are known as minor currencies. So we have a whole lot of them. We have the Chinese yuan, we have our own Nigerian naira, we have our own, we have South African rand, we have shillings, we have a whole lot of them. So if you are outside the major currencies, they are described as minor currencies. So aside from that, because we trade currencies in twos, like as a pair, so like we said, that it is when it is Forex trading is more or less like you're buying one currency while you're trying to sell another. So they are being traded in pairs. They are being traded in pairs. Now, how do you trade Forex? Yeah, you trade Forex through a brokerage firm or a broker. You trade Forex through a brokerage firm or a broker. One Royal is a broker. Now, what One Royal does is One Royal gives you the access to the financial market. They give you the technology to trade Forex so that you can access the financial market and trade whatever you want to trade, be it Forex, crypto, any other thing that is tradable. So that is what we do. Okay, see it as you having money and you want to transfer or you want to send money to someone. You having money does not mean you have the means of sending it to someone if you do not have a bank. You need to have a bank, most likely the bank app. So you deposit the money, then you'll be able to make the transaction. So just as you can relate the same to a Forex broker. You want to trade, but you cannot access the financial market. So you need a brokerage firm. So we give you access to trade the financial markets. All right, so we have categories of currency pairs. We have different kind of currency, and I said that they are categorized into two, basically. We have major currencies and minor currencies. But for the categories of currency pairs, we have, number one, we have major currency pairs. We have what we call the majors, or you can just say major currency pairs. So major currency pairs are currency pairs that do not include US dollar. They are major currency, but they do not include US dollar. I told us about having major currencies like AUD, that's Australian dollar, Switzerland franc, Japanese yen, Great Britain pound, European euro, USD, that's United States dollar, and all that. So, but for us to say a pair is a major currency pair, so that means it would have must be a major currency, while the other one must include US dollar. And I would show us examples of that. So these are examples of major currency pairs. Now, if you can see my screen, you would know that euro, like I told us the other time, euro is a major currency. Japanese yen, this is JPY. This JPY stands for Japanese yen, is a major currency. Great Britain pound is a major currency. Switzerland franc, this is CHF, is a major currency. This Canadian dollar, this is Swiss franc. This Canadian dollar is a major currency. This AUD, that's Australian dollar, is a major currency. NZD, that's New Zealand dollar, is a major currency. But the common factor there in all of this currency is that being paired with USD. So that makes them a major currency pair. So when you pair a major currency with USD, so that gives you a major currency pair. So I hope you are getting that. . 。  . 。  . 。 . . 。 . 。 . 。 . 。 . 。 . 。 . 。 . . 。 . 。 . 。 . . 。 . 。 . 。 . . 。 . 。 . 。 . 。 . 。 . 。 . 。 . . 。 . 。 . 。 . Are we getting
Yes.
it?
Yes, sir.
Okay, please, I need responses from others.
Yes, sir.
Okay.
It's okay.
Yes, yes, sir.
Yes, you are getting it, sir.
Okay, good. Okay, so we have major currency pairs, then we have what we call crosses. Crosses are, okay, I think I have a message. Okay, yeah, we are getting it, good. All right, so we have what we call, I've explained major currency pairs. Now we have what we call crosses. Crosses are also major currency, but they do not have USD paired with it. So it is one major paired with another major currency. But the other major currency that is being paired with is not USD. So just like we have this, Euro is a major currency. This is Swiss franc. This is Switzerland franc, is a major currency too. Euro, GBP. This GBP means Great Britain pound, is a major currency as well. Then Euro card, this is Canadian dollar, this is Australian dollar, this is New Zealand dollar, this is Sweden currency. So all of these are major pairs. If you check this, Euro JPY, GBP JPY, CHF JPY, card, all of these are major pairs. All of these are major pairs, but they do not interact with USD. So that's why we call them crosses. So we have a whole lot of them. Then the last one, we have exotic. Exotic are when we have currencies that are from countries that are just developing or emerging. Countries that are just developing or emerging. I mean, they are from emerging markets, or they're just developing when you pair them alongside USD. A very good question. Is Nigeria a developing country or an underdeveloped country? Are we developing? Who can answer that?
We are trying, we are trying.
We are trying. Okay, let's keep trying. Let's keep up the good work, but we can do better. Okay, so I would give us examples of exotics. So we have USD BRL. This is Brazilian currency. We have this is Hong Kong dollar. That's why it is called HKD. So, but they are paired with USD. USD SAR, that's Saudi Arabia currency. This is SDG, Singapore dollar. This is ZAR. This is Rand, South Africa Rand, Thailand. So, these are exotics rather. So, so far, we have covered what is Forex, what is financial market trading, how do we trade financial markets, what are the days of the week that the Forex market is opened, and we've covered a whole lot too. We've covered currency pairs, major currency pairs, minor currency pairs, minor currency, major currency. So at this point, if anybody has any question, we can ask before we go on.
Hello, sir.
I'm with you, sir.
Yeah. Under the major and minor currencies, sir, which one can we categorize as Naira, sir?
As Naira, is it now two things? You are saying major currency or minor currency. Now, if you are to go by that, Naira should fall within minor currency, because any currency that does not have any of those 9 currencies, so they belong to minor. I hope you get that, sir. Hello.
Yes,
please,
sir.
did you get that? Okay, good.
Yes, sir.
So, okay, so who has any other question before we move on? Okay, so can we move on? Okay. All right, good. So in Forex, we have what we call Forex trading session. Forex trading session. So the market is active 24 hours a day. Doesn't mean you should trade Forex 24 hours or every time the market is moving. So we have trading sessions. Now, what does trading session means and what is the implication of trading sessions in our trading career? So number one, trading sessions gives us the time that some currencies are most active over others. So we will know that, okay, there's this time that USD is active the most, or maybe GBP or Euro is active the most. So that if it is this currency that you want to trade, you will know that, oh, this is when I have to be active. So then the implication is it brings a structured approach to trading so that we will not now what we are trying to achieve in trading, aside from the money, is a lifetime of freedom. Not having to be bound by you you having to stay with your chart every day. So, but it will not make sense if you call yourself a trader and you find yourself on the charts every time trying to look for trade. In fact, most successful traders don't trade every time. Successful traders don't trade every day because successful traders have gotten to know that less is more. Now, the meaning of less is more that I'm trying to say is they look for few quality, profitable trades over quantity. So, and by doing that, they take advantage of the session that is mostly active to trade. Now, if they are going to trade USD and other currency pair, what they're trying to do is to look into a time that USD is mostly active. Now, what that will do for them is, number one, it will give them, now USD will move the most during that time, either to the upside or to the downside. That is when USD will be most volatile. So that they won't have to be checking USD all the time, staying on their charts, and maybe the time that most of the time that they are checking, USD is not really moving. So the targets, so they narrow it down to, oh, this is the trading session. Okay, this is the type of currency I want to trade. Then let me look for the trading section where when it is mostly active. So I hope we are getting it. Hello, are we getting
Yes,
it?
sir.
Okay, okay. Okay, please, if you can't talk, you can always chat. Can put it in the comment section so that I will know that we are following. Okay. Please, can we all still see my screen? Can we see the screen? Okay, how about now? Can we see the screen? Hello, can we see the screen? Okay, okay, okay.
Yes.
Okay, thank you. Okay. Okay, so trading session can also be called market hours. So market hours gives us the best time to trade our currency that we want to trade. So now I would 1 minute trying to the network is not loading, trying to make sure it loads. Okay, so basically we have four four market hours. Market hours have been categorized into four. Now we have more than that, but for the sake of making it simple and not confuse us, they have been categorized into four. In fact, some traders have found a way to make it just three. Yes, because they collapse some time zone so that it won't be much of, having to deal with the confusion that can happen when you're trying to look at the market hours, right? So we call it Forex Market Hours. So I'm trying to share my screen. Okay. Okay, so can we see this? Can we see Forex Markets time converter? Hello, can we see this?
Yes, you can.
Okay, good. Okay, so we have, okay, thank you. All right, thank you. Okay, so for the time zones, we have what we call the Frankfurt session, Now, the reason why we are more mentioning the states rather than the country is due to the fact that in those places, there are time zone difference in even the states. It might be in the same country, but there will be a slight difference in the time zone when it comes to states. It is not like Africa or Nigeria. Let's say in Nigeria now, if you're in Lagos, this is 3:14 in Lagos. If you go to Ado-Ekiti, or if you go to Oyo, if you go to Ebonyi, it will still be 3:12 there as well. There's no time zone difference internally, but in those places there are time zone difference. So because of that, it is being structured in a way that we just pick one central state that we can use as a guide for the whole country. So that's why we are using more of states. So the first one is we have what we call the Frankfurt trading session. Now, Frankfurt is in Germany. So, and what we spend in Germany is euro, European euro, that is what we call it. So we spend euro in Germany. So if you want to trade euro, now this has been converted to our own time. As you can see, the time and date, this is the time, this is today's date. So this has been converted to Nigerian time. As you can see here, Africa, Lagos. So if you want to trade, let's say you have a setup, or you have a, yes, it's called setup. When you analyze a trade and you are seeing that, okay, some things are aligning on the charts. So it is called a setup. So when you have a setup and you want to trade it, maybe you are trying to look for a buy or a sell. Now the best time to trade, and maybe it is Euro USD or maybe Euro JPY, and it has Euro there. So the best time to trade the pair will be during the Frankfurt session. Now, what this is telling you is that from 7 a.m. to 3 p.m., Euro is going to be most volatile. It will move the most. Then after this 3 p.m., Euro might not have much volatility again till the next day, 7 to 3. And if you look at this 7 to 3, over there in Germany, it is most likely their own working hours. So it is structured, the time zone imitates their working hours there, over there, their own 9 to 5, as the case may be. So Frankfurt 7 a.m. So Frankfurt 7 a.m. is their own 9, while their 3 is their own 5 over there. So, but here it opens 7 a.m., closes 3 p.m. So if you want to trade Euro USD, Euro JPY, Euro this, Euro that, so the best time to trade it is to trade during the session that Euro will be most active. Now, there's a balance to this. You can trade Euro pairs at another time zone as well, provided that the other currencies that they are being paired with, the session for that currency is opened. Now, the reason why you're going to be trading Euro JPY, Euro USD, Euro AUD, Euro GBP, or anything Euro at this time, it is because, number one, it is because you are using Euro as a deciding factor, either to buy or to sell. Because this is the session that Euro will move the most. So you are using Euro to make informed decision that, okay, if I'm going to buy or if I'm going to sell, everything centers more on Euro than the other currency. Maybe you are trying to buy Euro USD during this session. Now, what this is telling you is that what you are going to be focusing on, either the currency is strong or weak, will be mostly Euro. Now, that same Euro USD, if you still want to buy or sell Euro USD, now, as you can see this, the New York session, that's for USD. The New York session opens 1 p.m. to 9 p.m. our time. So during this time, from 1 p.m. to 9 p.m., if you still want to buy Euro USD, yeah, most of the decision making that you're going to be taking will be mostly on what is happening to USD at the moment, no longer Euro, except maybe we have overlapping sessions. Now, overlapping session, it means that when two sessions are happening at the same time, when they overlap. Now, the overlapping session for Euro and USD is from 1 to 3, because when USD session, that's New York, opens by 1 p.m., Franco session, that is Germany, Euro, will still be active till 3. So from 1 till 2 or till 3, you can still look at the influence of Euro over USD, but mostly the influence of USD. So I hope we get that. And if you check the time, you will see that this session has closed already, because this is 3:20. This session has closed. So that's why we have the status to be closed. So the first thing that you would do every day as a trader is, number one, you need to know that which session do I have time to trade today. If I have time to trade during London session or during New York session or during Frankfurt, I should know that I have to use, if it's going to be London session, then I know that I have to use GBP, that's Great Britain pound, as my most decision-making currency, regardless of any currency that's being paired against. Either it is GBP USD, GBP JPY, GBP AUD, Euro GBP. So we have Frankfurt, we have London. London opens 8, closes 4 p.m. New York opens 1, closes 9. Sydney, this is for Australia, opens, that's for Australian dollar, opens 11, closes 7. It opens by 11 and closes by 7. Then Tokyo opens by 12, closes by 8 as well. Tokyo is for your Japanese yen, Chinese yuan. But since we are focusing mostly on major currencies, so we might not be talking more about Japanese yuan. So we'll be focusing more of, sorry, we might not be talking more on Chinese yuan. We'll be focusing more on Japanese yuan. Yeah, Japanese yen. So Tokyo opens. Tokyo is a state capital in Japan. So Tokyo session opens 12 a.m., closes closes 8 a.m. So that's their own 8 hours of work, like their own 9 to 5. So I hope we get the time sessions and all that. Did we get it? Hello? Okay. Is it possible to have all these country currency? Yes, yes, very much possible. Where do you want to have it? Like, is it to have it to trade, have it available to trade or what?
Yes, to have it to trade.
Yes, yes, they are on our platform. One way has all of this. One way has it, sir. Okay. All right. So is there anyone that has a question? Okay, so I explained overlapping sessions for us. So it is when we have two sessions going on. So that is when the market is most volatile. Overlapping session. Let me share us. I'm trying to share with my network. Okay, so can everyone see my screen? Okay, so these two sessions are going on right now. Open, open. So they are overlapping sessions. So from 1 to 4, we have overlapping session of London and New York. So market is most volatile for Great Britain pound, that's GBP, and USD during this time. Although when the session starts, it will be volatile, but it will be extremely volatile. The volatility will increase during these periods from 1 p.m. to 4 p.m. Now, so as not to confuse us, because the difference between Frankfurt and London is just 1 hour. This starts 7, this starts 8. So most persons will just call it London session, so as not to separate this. So they will just say, okay, London starts by 7 because this starts by 7 to 4. So for this as well, before this because the Sydney starts by 11, closes 7, and this Tokyo starts by 12, closes 8. So they will just call these two because it is just 1 hour difference. So they will just call this Asia session or Tokyo session. We call it Asia. So we have London, New York, and Asia. So as just to make it easy. If anyone wants this link, I can drop it so that we can be able to monitor the times. Although once you start trading, you won't need to keep checking the link. It's something that you just know naturally. You know the sessions that we have. So, but when we have overlapping session like this, open together, so market will be volatile. Okay, so do we have questions? Okay, don't think we have questions. Okay, so just a short quiz before we end the session. So I want to ask us, according to what we've learned today, when is the best time to trade Forex? I just want to be sure that we are following. When is the best time to trade Forex? We can unmute if you want to talk. When is the best time to trade Forex? Based on what we just learned.
Hello?
We have a hello, sir.
Hello. Yes.
Yeah. We can use Great Britain's 8 a.m. to 4 p.m.
Okay.
and the United States 1
Okay.
p.m. to 9 p.m.
Oh, okay.
Let's start to
Wow.
treat London session.
Okay, so
It's
yes.
London session.
Okay, so let me just say this. The best time to trade Forex is some people will say it is subjective because of it depends on the pair they want to trade. Do we get? So I intentionally asked that so that I want to know how we are able to see through the confusion that I want to throw into us. So the best time to trade Forex, it actually depends on the pair you want to trade. You cannot be trading Euro JPY doing New York. You are expecting Euro JPY to move. So that means you are trading off session. So the best time to trade is when the currency is in session. That's number one. But you will have more volatility when there's overlapping session. Overlapping sessions such as when two sessions are going on. So you have much more volatility. Activities will be increased. So that means a lot of people are buying they are buying and selling euro. A lot of people are buying and selling USD. So there will be increased activities. So this chart that we are seeing, the chart that I just showed us, is the activities of buyers and sellers, basically. It is not auto-generated by one AI. It is the activities of buyers and sellers around the world. So the chart is a real-life reflection of what is happening when it comes to foreign exchange. Okay. Some people will say London session. Yes. London is good. New York too is good. New York is good. Okay. So do we have questions? Do we have questions? So the worst times to trade is when the volatility is not too, there's no volatility in the market. That's like the worst time to trade because what we are capitalizing on is the price movements. So doing hours that the session is not active, there are no major movements. So price is just ranging. It will neither be going up or be coming down. It will come down small, go down small, come down small, go down small. So it will be a consolidation. So there's no definite movement. So it's one of the worst times to trade. Then we also have what we call holidays. Now, okay, and maybe the next class we will talk about fundamentals, where I will let us know what holidays means. So holiday means when the major participants of the markets are not active for the day. The major participants of the market are not active for the day. Like I explained, that's what moves the market is volume. So those that are holding the major volume will not be active throughout the day because they're on holiday. And I'm very sure that we can guess now those that the major participants are banks, governing banks of countries. Like in Nigeria, the governing bank in Nigeria is the CBN. We have the Bank of America, that's BOA. We have the BOC, Bank of Canada. We have the Reserve Bank of Australia. We have the Bank of China and the like. So whenever they are on holidays, so the volatility dies down. So that is one of the worst days to trade. Now, the worst time to trade for a newbie might be when you are trading news events. Now, there are some news events, financial news events that would happen. That the premise of that event might be too volatile for a newbie to handle. So you might want to stay out. Next time too, we'll also discuss news and the impacts on the charts. All right, so do we have anything to ask? Or it might not be about what we have just learned today. It might not be what we covered today. If you just want to ask outside what we have done, anything about Forex, anything about financial market trading, anything about One Royal, anything about Traders Watch, you can ask. Okay. All right. In the absence of none, I think we can call it a day. Well, I'm still very much available. If you have questions, you can always reach out to me or put it on the group page. Just ask on the public space. But if you feel you can't do that publicly, you can always come to my DM. All right, everyone. Thank you for attending. We'll see you again next time, probably on Thursday. Thursday is our next class, please. Let's ensure we plan to attend. All right. Goodbye, everyone.